The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to do things a little differently today, folks. I posted the chart, the 15-minute chart of the gold, because we're having such volatility there today. Last night, we had a 382 retracement up to 1825. That gave an ABCD pattern down to 1770. The low today has been 1768. That should be it. We should have a pretty good rally from that level. How much of a rally? I don't know, and maybe it won't, but that's what we're looking at. Now, the next thing we're going to cover here is something that several people have asked me about, and I have signed a contract, and I will be going to Dubai, and I'll also be going to London in October with David Paul and Tom Hugard. We're going to be live trading in Dubai and also in one other city in Saudi Arabia, Riyadh, and then we're also going over to London and do a live two-day gig over there also. So that picture, Jimmy, is actually of Tom Cruise. It's not really me. Anyway, let's take a look at this, folks. This is what I want to do is I want to tell you how I got started doing this. I get this, information all the time, but let me explain to you. My first trade was 1959, freshman in college. My second year in school there, I had a few electives because everything I had was in science, and I took a class in statistics. The only reason I took this class because the guy that was teaching it drove a 1958 Porsche Speedster. He was out of Yale University, and he taught statistics, and I really loved that car. And he was a really fun guy to listen to. Statistics is usually bearish or boring, but he made it interesting because he related it everything to the stock market. Well, in the first week I was taking the class, I went into his office, and on his walls up there were pictures of wheat and corn and soybeans and silver and a few other things, a couple of, I think, Montgomery Ward and something else, a few other stocks that he had up there. And I asked him what he did, and he said, well, I'm a speculator. I buy and sell things that I think are of value. Well, he got me interested. And in that room, he had two ticker tapes. He had a ticker tape for the Merck and a ticker tape for the Board of Trade. And one of the things that he did, he had students that he would pay $1 an hour. And remember, the minimum wage was $1.25. For $1, you would sit there and you would see the ticker tape come through, and you mark the prices off. And of course, when they made new highs in that 5-minute period or new lows, you marked that off. And so you would keep a chart of your 5-minute chart. That's the only way you got those things, because the only way we got the data. We didn't get good data till 1983. So you can imagine how, what a long time that was. So I never charged him because I was learning, and I thought it would be a good way to learn what the heck was going on. And then we got involved in silver and a whole bunch of other stuff. But through the years, you've heard the story of me going and losing a lot of money. And, you've heard that before. You don't really need to know that. All you need to know is when I did lose the money, I went back to Dr. Jim and I asked him, what I did wrong. And he actually laughed at me. And he said, you think you're the only person that's ever screwed up like that? He said, the answer's right there in front of you. He said, you're just not being smart enough to look at it. And I said, what do you mean? He said, look at your statements. It'll tell you what you did wrong. And so he pulled a few of them out. He said, look, you're adding to losing positions. My God, he said, you're exposing your risk in a market that is going against you. And he said, look at this. He says, just unbelievable. And look at this. Look at the losses on some of these trades. He said, that's 5-6 times the normal, risk parameters you're supposed to use. And that was it. The first mistake teaches. The second mistake kills. My first mistake was putting the wrong trade on. My second mistake was not doing anything about it. So that's how I started to learn all this stuff. But through the years, and I went to work at Drexel during 76 through 82. 82 is when a big change happened, because I knew that these computers were coming and we would be able to see these prices like we have them today. I didn't think it would be quite like they are today, but everything is available to us by telephone or on your phone or whatever it is. And in commission rates, when I was at Drexel, I got a reduced rate. The rate for customers at Drexel was $50 per round turn, and I paid $40 per round turn. And so when I became a member of the Merc in 1982, my rates went down to $2. I became a $2 broker, $2 in, $2 out. And I figured if I can make money at $40, at $2, I should do okay. And I did okay. But, I learned a lot of things at the time that I was at the Merc. And because I knew with these things coming that I had freedom staring me right in the face. Because if I could do that, I never had to work for anybody else again. I could live wherever I wanted to live, and I didn't have to worry about much. And so I wanted to find out if it was really fair and if it was equitable, to do this. And my main thing was I wanted to know what my competition was. Who was I trading against? Was I trading against Merrill Lynch? Was I trading against the Swiss Bank? Byron Tucker and Leo Malama, helped me point out who I was, trading against, because I tell you that one of the most amazing stories that I remember, and I think I mentioned it here before, when I traded at Lynn Waldock, every morning when we came in, we had an equity one rating for us what we did the day before. And so mine was very thin, 1 or 2 pages. I only did a few trades a day, but Reggie was on the elevator, the guy that was delivering it, and he had one that was about 12 inches thick. And I said, well, that must be a lot of traders. He said, Larry, that's just one trader. I said, Reggie, if you let me look through that, I'll give you $50. And Reggie said, Larry, for $50, it's yours. And so I took the thing, I put it in my briefcase, and I went home. It was the equity run of Bill Shepard. SHEP was his badge name. Many years later, or 3 or 4 years later, we became really good friends. I told him the story, and he said that happened all the time. He said people were always looking, and then he ended up owning his own firm because he just wanted to be a little bit more private. But I went through them just to see what he was doing. He had the British pound was trading like at 275, and he was short at 550. I mean, it was unbelievable, the massive amounts of money that he had made, and it was just really incredible, to go through that. So those are a few of the things that I learned. But the main thing was I wanted to make sure that the stops were filled the way they should be. Of course, with electronic stuff now, it's really not a problem. You can put your stop in. If it gets hit, it's supposed to get hit. There's nothing you can do about it. So remind yourself that when that happens, it's there for a reason, and you don't want to mess with it. And that's the main thing of why we're doing this. So those were the reasons that got to me to the point, because I knew I could win, but I wanted to make sure that it was going to be in a fair and equitable environment. And I certainly knew that after the first 3 or 4 months, but I stayed a couple of years because I loved living in Chicago. It was close to Terre Haute. I could go down and see my aunts and my cousins and stuff, and my sister. And so I had a lot of fun. And of course, I met Byron, and we became very good friends, and a whole bunch of other people that I've been friends with through the years there on the floor. So it was fun until I went to work for Commodity Corporation in 1984. Anyway, late 84. So that was the main reason I was doing that. Well, part of the thing that I put in this Floor Trader's Handbook is how I viewed these markets, because I've talked about this many times. It's not about how much money you make. It's about how much money you don't lose. And that's what these patterns are all about. And all I'm going to cover here today is basically the ABCD pattern. And there's a whole bunch of stuff in here. It's a 90-minute video, and it's 88 pages of other stuff that's incredible information. That's all professionally done. And we'll cover this a little bit more when we get back. 877-927-6648.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, David White has posted a part of the Mark Douglas's book about this happened in the Barry Lynn's office. I happened to be there that day. Mark was there, and it was 1983, I believe, and we had come to go to lunch at Little Brokers there in the building, and this guy was up there. His name was Nick something Frontinellis. I can't remember his last name, but he was a big GAN guy, and he was in there giving all the brokers a lecture that beans stopped right here. There was no way they were going down. It was about a half hour before the close, and he was saying all the GAN stuff that was happening, and this was it. Buy as much as you can. And Jack Waldock, who was a partner of Lynn Waldock, was the guy that did it, and he said, "Oh, it's not going to go down anymore." Now, Jack was a hog farmer in Iowa. He owned thousands and thousands of acres and also hogs. And he picked up the phone, then called the Board of Trade, and he said he didn't sell 2 million beans. He sold like 200 bushels, which was about, I don't know how many bushels that was, but he sold 200. He said sell 200 July beans at the market, and the market just couldn't handle 200 contracts, and the thing just really started to break. So that's what happened, and it was it evolved into a whole lot of different stuff, but that was exactly what happened that day, and beans continued to go down for three or four more days after that. Anyway, let's take a look here. Simplicity is what really this is all about versus complexity. It's much easier. The next one we want to talk about, this was a book by Burton Malkiel, 1973, where he talked about the random nature of the stock market, and he said being a technician is a scientific scrutiny and chart reading must share a pedestal with alchemy. In other words, it was just absolutely just about as totally worthless as you can get. And this stayed that way until 2000. In April of 2000, this appeared in the Business Week, April 17th issue, a paper called This Alchemy Shall Yield Pure Gold, which MIT came up with Dr. Andrew Lowe writing the article with three of his associates, showing that there are technical patterns in the stock market and all other markets that repeat over and over again with such regularity and with a degree of predictability. This was a 64-page paper. Page 24, as we're going to talk about it in just a minute, was the most important part of this. But basically what he did, he took 850,000 chart patterns over time period between 1962 and 1998. And they looked at all of these. They put mathematical equations on these. We've seen them before, head and shoulders, pennants, flags, ABC, well, not ABC, double tops, double bottoms, that type of stuff. Well, what I'm going to do now, I know you're not going to read the paper, so I'm going to go to page 64, page 24, and let you read what it actually said. So here's what Dr. Lowe said when he did this. And he basically said, it appears that when you look at these things over time periods, certain technical patterns do provide incremental information, especially for NASDAQ stocks. Well, it works on anything. It may be possible to determine optimal patterns for detecting certain types of phenomena in financial time series, blah, 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 blah. Well, that's exactly what it was. So here it was. And then what we do is we go back and shortly, right around that same time, a gentleman, the father of fractal analysis, a man named Benoit Mandelbrot, came out with his book, The Misbehavior of Markets. And basically what he did was he took 30 years of cotton prices. And all he did is he measured the scale of what was going on in the cotton market. Mandelbrot used a seed pattern as a constant. As the seed pattern grew, it manufactured the building blocks that became the larger patterns within the cotton market, patterns that maintained the original shape of the seed. He is telling you that the markets are fractal. This is why when I did the Floor Trader's Handbook, I did it with the euro, the most actively traded thing in the world. So if it worked with the euro, it would certainly work with anything else. But the question was, if only we knew what the seed was. Fortunately, Dr. Mandelbrot did. And you're not going to believe this, boys and girls. Sit down. I can hear the drum roll coming right now. And here it is. Mandelbrot called the seed the lightning bolt, and we call it AB equals CD, as old Mark Douglas used to say, sitting right here next to me here in my office in Tucson, Arizona. AB equals CD. This is the fractal analysis that's made, Mandelbrot rich beyond his dreams, and also him the father of fractals. But what it's related to is the lightning bolt. Are you kidding me, boys and girls? Those of you that have ever studied with me might remember, just by chance, this particular pattern that we have in the Gartley book on page 249 on the practical use of trend lines. What do you see there, boys and girls? You see the lightning bolt, known as the AB equals CD pattern. That's an ABCD bullish pattern. And then also we have the ABCD bearish pattern. Both are fractals. And that's what we're looking at as we're trying to determine what these markets are going to do. Do we think they're going to work all the time? Of course not. Nothing works all the time. It really doesn't. So you've got to be able to do it. So if you're thinking, hold on, someone's got a question here. Just a second. You're probably telling me to shut up. Clouds are not spheres. Okay, Benoit Mandelbrot. That's right. He knew all that stuff. He's one smart cookie. John Jameson told me that Mandelbrot was on the same plane as Albert Einstein. And that I don't understand, but I know when I worked with Einstein there at the University of Chicago when we were working on the theory of relativity, and I was trying to help him with it, he did have a lot of information, but I didn't get to work with Mandelbrot. I only got to work with Einstein during the years when I was 12 and 13, and I still have 3 shares of the Brooklyn Bridge left. Let's just take a quick review here of what we're looking at. See, when we take these particular patterns, this ABCD pattern, what we're doing is we're taking this fractal pattern, all right, and we're taking the numbers of the Fibonacci summation sequence. We're not looking at all the Fibonacci numbers. We're basically looking at 1.27, which is the square root of 1.618. We're taking 786, which is the square root of 0.618. We're using those 4 to determine where we are in the AB equals CD pattern. That's basically what we're trying to do. Nothing more, nothing less. There's nothing mysterious about this. What we did in the handbook was we looked at 10,000 patterns in the euro to prove that these things give you a 2.5 to 1 payout, correct? In other words, you're going to make 2.5 times more money than you lose. The longest stretch of losers we had, I think, was 6. And I think we had one that was 17 or 18 runs. I don't remember. It was a huge run. But the odds were so heavily favored with this ABCD pattern that you just had to pay attention to it. That's That's the bottom. Last night was a perfect example. We had a 10 pip loss in the euro, and I made the mistake of saying, or I should have said, and believe me, I've been up all night, so I missed this, but I said when I looked at this and sent it in, we bought the euro and we had a 10 pip stop, and I was going to put in there and go short if we go below here, and that was the trade of the day, because that thing just collapsed after it went through there. That's where one of those patterns go past point D, and you just got to get out of the way. When you're at point D, boys and girls, that is when the drum roll is going and all the things are happening, either up or down. And the fat lady's getting ready to sing, and even if she works at Weight Watchers, she's still going to be singing. And if she is singing really loudly after point D and the market's moving, you're wrong. Get out. That's it. Let's pay a few bills. 877-927-6648.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, the next one is an interesting one because it is the one that shows you that this is the euro. And if you take a look at the euro, we'll be able to look at don't worry about that, Bill. I know the standard deviation is, and it's lower, Bubba, lower. I think it's 40. 4060, I believe, my friend. Anyway, let's take a look here. If you can see this, if you look at this, it's a 5-day chart of the euro, 30-minute. It's showing the different swings that's going on, and if you add all those numbers that we look at, you'll see all of those swings are related to those 4 numbers that we look at: 618, 786, 127, 1.618. If you add the ABCD patterns, you've got some pretty good ideas that what's going on. Now, here's what we're going. The reason why I'm showing this, folks, is twofold. One, some people have asked me for it, and the second reason is this is part of my presentation that I'll be giving in the Dubai and London seminar. But I will be we'll be doing live trading, which is even more fun. So if we take a look here at this, you'll see here this is a euro. And what we're going to do now is we're just going to go in, and let's just get this up here to take a look at it. Pay attention here, folks. Well, if you don't want to pay attention, I don't really care. What the hell am I talking about? This is where the fat lady sings, boys and girls. You don't believe in fractal analysis? You don't be an ABCD? Let me show you what Mandelbrot was trying to tell you. Do you remember what he said was? He said you have these little seed patterns that are there, but the little seed patterns are fathered or grandfathered in by the bigger AB equals CD pattern. So look at this euro chart, folks. Those of you that are students know on the left there in December, that's an ABCD 3 drive to a top pattern. Yes, we were selling there. Look at the Gartley right in the middle in February, ABCD. The AB leg has 8 bars up. The CD leg has 8 bars up. The AB leg is equal to the CD leg in both price and time. It stops at the 61% retracement of point D. A Gartley pattern goes down to another ABCD. But here is what Mandelbrot was trying to tell us. And I'm going to show you in the next the next slide, because that's the one that really explains, fractal analysis and why the ABCD patterns work so well. See the overall larger pattern that's in the euro? That's a perfect ABCD. As Twentyman said, defy human nature. Do the work yourself. Measure the distance between A and B in price and time, and measure the distance between C and D in price and time. And if it comes up at the right time, you've got something that you can use to make a dime. And that's it. Because remember, as Steve Shapiro has always told me, 10 dimes make a dollar. So that's what this is about. Now, patterns that we deal with work on different time frames. That was a daily. Now, if we take a look at the euro, I know those of you that are my students and study this stuff, I know it's like teaching you to suck eggs, but there's a lot of people out there that don't know what this stuff is, that they probably should be exposed to it. If we take a look at this here, you'll see that this is a 15-minute chart on the euro. You can see the ABCD patterns that are still there. And I'm just going to show you the different ones, because the next one we're going to see, of course, is the British pound. And you'll be able to see that too. You can see the ABCD at the top. Then it comes down, makes a double top. Then it makes a perfect ABCD to the downside. And again, if you measure the time between A and B and C and D, I mean, it's just spot on right there. Those are the things that you've got to remember that you want to do this. Now, if you're really short-term oriented, you can also take these fractals and take a look, and you'll be able to see that these are 5-minute charts of the British pound. And there's all your British, your ABCD patterns are right there in front of you. You can see them. They're just as clear as possibly can be. Now, the thing that you have to remember, and that is point D is so very, very important, because if you get point D and the market does not react the way that you think it's going, damn, I got to buy gold. Time out, boys and girls. All right, just give me a second here. Now's the time to buy gold, folks. I'm going to buy some gold. I can't reach the computer, but I'm going to have to wait a little bit. Anyway, let's take a look here at this British pound. You see we're doing this. If we get to point D and things go crazy, then you've got a big problem. That's why the fractal ABCD is so very important at point D, because it works right then. And I'm talking if you're in a 5-minute bars here, if it hasn't worked in 5 bars, 20 minutes, something's wrong. That's just pretty much what it means, because you've got to focus on the one thing that'll keep you alive in this business, and that is the risk. You have to think like a winner. A winner thinks, how much money can I lose? A loser thinks, how much money can I win? And that's the whole reason for doing what we're doing here. Very, very, very important. Those of you that looked at Fibonacci numbers and ABCD would easily see why we got to 4220 in the E-mini S&P today. Was a 50% retracement of the high of the whole move, and it was also a ABCD pattern, and it hit it twice at 4022. So there is another reason why these patterns are, so very, very much fun to deal with. So that's the main thing. Now, on a longer time frame, now we'll look at this. This is one because we're dealing with people in the UK. You'll notice this is the British pound on a 60-minute chart. Here again, you have a perfect Gartley pattern. You have a 61% retracement right at point D. And the good part about this, look at this, at point D, which is your entry point, no oscillators are needed or anything like that. If all you have to do is, if that's point D, if you look at the ABCD structure, that takes you off the top of the page. So you're risking about 50 pips here to make 250 pips. That's 5 to 1, folks. I mean, you're shooting for 1.8 to 1. When you get 5 to 1, that's a gravy train. So those are the things why it's so very, very important. And that's it. Now, if we look at the last one here, and then we'll get on with some questions that you folks might have. We'll get up here to take a quick look at it here. That is the Japanese yen. You'll see here we have a bearish Gartley, another perfect ABCD, and of course it measures down to where we are. So that's the program that I wanted to bring to you today to show you what we're looking at here. We have a question. ABCs, regardless of whether they are honored, meaning 100% retracement is part. Yes, you can have 100% retracement as long as it doesn't exceed the X point, Bo. If it goes beyond X, then that's either a 127 or 1618. Try to find the easy ones, folks. Give me a break. You know that? That's amazing. Steve Rhodes is telling about the Brooklyn Bridge shares. Steve, I never get paid for those Brooklyn Bridge shares that I sold you to a few years ago. Steve does a great job at this. Anyway, let's make a quick look here at something else. We've had a market that has, we've been saying this for quite some time. There's been a market out there that has been telling the stock market there's been something wrong, and that has been Dr. Copper. And if you take a look at this here with Dr. Copper, I don't have the updated chart here, but we went down and we made new lows at the 428 per pound level. And boy, I don't know if it's taken it out or not, but that 428 is absolute golden. I mean, if it goes, actually 427 is the number. If it goes below 426 in copper, let's see, how do they say that? They say au revoir means goodbye in French. Vaya con Dios is goodbye in Spanish. Hasta la vista is goodbye in Mexican. And a price of copper going below 426 is goodbye in any language. Much like the soybean market. Say hello.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I posted a chart here of the July copper. Yesterday, we hit a perfect ABCD pattern there at 426. I bought that stuff last night. It rallied up to 435, and I was in the middle of the night. And of course, I got a little bit nervous. I ended up taking a small profit in it, but I made a note to myself to sell it if it goes below 26, and of course it went through there like melted butter. Mr. Z was kind enough to point this out, and if you'll notice here, if you look at this on a 5-minute chart, you can see what happened once it went below the 426 level. Folks, that's what's going to happen to the stock market when we go below 4160, I believe is the number. 4160 in the S&P. It'll probably drop 100 points really fast, down to the 46 level. They have not given a lesson in hard knocks to those boys at Reddit, or whatever they are, the Robin Hood boys. Sorry to be so obtuse today, whatever that word means, but they're going to give them a hard lesson. We've seen this lesson in 2000. We've seen the lesson 2008. And we're going to see the lesson this time, too. We saw a mini lesson back in 2018, but I think this one is going to be a little bit more nasty. We've got the bond market is going straight up. I mean, you're talking about, selling gasoline to someone trying to put out a fire, but that's the way the market's running. So that's what you have to look at as you're watching these things unfold here this morning. So if you have any questions, it's 877-927-6648, and we'll be happy to answer them for you if we possibly can. The chart that I posted, folks, for the soybeans, let me get this up here because I was trying, what I was doing last night was trying to avoid disasters, and I certainly was able to do that. Here, we'll take a look at this. Is the July soybean. We had a perfect ABCD pattern at 1444. At 1445, we bought it at 45. It closed at 1447, and it looked like everything was okay. And then the market totally, came undone after the Federal Reserve did whatever they were going to do, and it closed at 1442. And then last night, it had a nice rally. It got back to 1452, sort of a small profit. And I said, well, we got to put our stop below that last low to keep our losses simple as possible, and that's what we did, and it turned out to be a small loss, and I'm happy for that small loss because the market went all the way down here to the 1.618 expansion at 1410, I believe was the low. I'm not sure exactly, but maybe Mr. Z will tell us what we're looking at. Is July beans are at 1388? Shut the front door. Woo! Boy, that stop looks pretty good. Why didn't I go short? Wow. Well, boys and girls, something's happening. We're in the middle of a drought. We got supply demand things that were scaring the death out of us. At least that's what they're telling us. One of two things has happened. Either they're lying to us or something really dramatic has changed. And we have to find out what that is. So when things collapse like this, look, I've been doing this for a long time, folks, and this is the market's trying to tell you something here. It really is. It's very, very important that you pay attention to what the market is trying to tell you here. There's nothing else that you can do about it. It's extremely important. I hope you pay attention to that, because that's it. Ruby, don't. The strong dollar is. I know. Here, listen. We were expecting the dollar to be strong. Let's get the dollar index up here right now. That was not unexpected. We expected the euro to break at least. It went a lot lower than I thought it would do, but we were expecting the dollar index, of course, and it did a whole lot more than what I thought it was going to do. You'll be able to see it here. There's what we were looking for, and of course, with that wide range, let's get this up here for Ruby and the Romantics. You'll be able to see, here you are. There's your strong dollar. You can see the euro, and I believe we're above the 61% retracement now. We're pretty close to it. Ooh, we're right there right now. Are we? Well, let me see. Hold on, get it right on the money, honey. That's where we are. Hold on, just get this up here, because this is going to be it. Another day like this, and there's going to be a strong dollar, but we're right at the old 61% retracement as we speak right now. This has been a heck of a move, so that's where we stand, and we'll see. We were expecting the rally a few days ago. If you remember, we talked about that 135 pattern in the euro that was popping up and turned out to be okay. But now we're at the proverbial moment of truth. We're 91.96. Anything above 92.20 tells you you're going to go, some higher. But with this real wide-ranging bars, we got so much emotionalism in the markets, folks. I've said this many times. If you're not using stops, just write your checks out to Larry Pesavento, Tucson, Arizona, and save the commission, because they're going to get you. They're going to get you, because if you're not using stops, you're telling the market, I know more than you do. I know more than you do. And we know that's not the way it works. And it's going to teach you a lesson, and it's going to be a bad one. So use a stop, even if it's a desktop. That's why you have to do it, folks. I know I harp on this. I talk about it. And, yeah, I get stopped out at the high sometime. Yeah, I get stopped out at the low sometime. But that's okay. You just get on another train and, catch another bus or whatever it takes to get into another trade. But at least you get your head cleared. So how about if you bought those beans at 445 and decided, I'm holding this one. This is the one I want to be. Now you're sitting with a $3,000 loss, and it takes a 60-cent rally in beans just to get you even. Shut the front door and raise the rent. That's not good trading. No, you got to think like the slot machine. Remember the slot machine, what it says on the front? It says, I'm going to pay you $4,000 or 4,000 coins, but nowhere on the machine does it say, you have no chance of beating me long term, and the odds of you winning against me are 95% against you. And I've taken in $1.2 million more than I've given out. Do you see that on any of the trades that you're putting on? Of course not. That's what stops are for. You've got to do that. That's what the responsibility happens to be. God, I miss Mark Douglas on a day like today. I talked to Paula last night, and she's just a breath of fresh air. She's done an incredible job keeping Mark's business going, and the people that supported Mark through the years. Some really famous people have, always, brought her a lot of customers, and she's doing a lot of writing for letters and for news magazines and programs and stuff. So she's a pretty good trader too. She still trades Mark's treasury bond system, which would have made big money today because it's based on that opening breakout that we have. So that's a main thing that we're paying attention to as we look at some of these things here today. So I hope that helps. But that's what the dollar looks like. If you remember a few weeks ago, we were looking at the old piggies, and let's get this up here. Where are you, piggies? I think we're right here. Hold on a second. Yep. Oh, my goodness. Look at the piggies today. Look at the piggies today. We owe this one to our good friend, Marshall Robinson, out of the great state of Washington. Here is the ABCD pattern here in the hogs. We were at 119, folks. We're at 107 right now. You can see where we were supposed to have support, and the market was limit down the day before. Now it's limit down again today. Wow, man, this is a big one, folks. This is a huge move. You're talking about 4 or 5. That's a $5,000 move in 8 days, and that was that's just it. Look, AB equals CD. Mr. Mendelbrot himself, Benoit, is saying there it is, boys and girls. AB equals CD. The old lightning bolt itself. We'll take a break. 877-927-6648. Be right.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, we're back. Sorry, folks. We're asked to take a look at the chart of Big Steel, X, United States Steel. Now, you'll notice here that we are looking at a potential Gartley forming here at $21 a share. We're now at $23.64, having a big wide range down today. That's most probably where it's going. That would be a very good place for support. 21.41. Anything below 21.41 could possibly tell you that you're looking at something that might be a little bit more sinister to the downside. But right now, that's what it looks like. We just took out the lows of May. The early May, the 24th of May. We just took those out by just a little bit. So that tells us we've probably got a little bit more to go on the downside as we're looking at these things. So let's remind ourselves that these things, when they occur, They don't always do exactly what we want them to do, but this is what we're watching. And notice the high that we made up there just the other day was right at the 78% level. Now that's showing 0.84 because this software is so sensitive, and the difference between 0.786 and 0.84 for purposes of trading is very, very small. You're talking about 50, 60 cents, so it's not a big deal. We've talked about the fact that, Apple had that problem up there at that 130.80 area, and I don't know what Tesla's doing, but both of those have still followed along with what we think has been going on. Pay close attention, folks, to 1766, the low we had today in the gold. That's a multiple ABCD pattern here, and as we talked about, that is the thunderbolt that Mandelbrot thought was the seed of all these markets, and he certainly was right. You can prove it to yourself just by doing a little bit of hard work, and that's what it's all about. So please pay attention to it, folks. You don't get that chance very often. Live every day in an attitude of gratitude, and may God bless. I have 2 shows tomorrow. I do the regular show, and then I'm setting in for the master himself, Tom O'Brien, at 3 p.m. May God bless.